Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through the market update. We have one earnings trade so far, Q3, that just came in and the other day, and then we'll have Joe's analysis at the end. So let's get started. Okay, major indices, SPX, NDX, Russell, Dow, all still in state ones. Sectors, we did have a transition into two. That's healthcare, XLV. So that's the first one to drop into two. We had ones across the board before that, except for energy, obviously. Then pie wise, so pretty much flat week over week, 69.8 to 69.5. And we got state ones, very elevated, 52. We did hit the high was on the 30th there. You can see 53, so just below that right now. And let's take a look at the pulse stats here. It's bullish bearish. So I guess I'll do this first. Bullish bearish. So kind of topping out right around that 70, 69 area so far. This is kind of like a typical pattern here where we round it. Sometimes we get ledges, but this is kind of typical. So we have kind of a ledge here. See if it can hold up there, or if we start making our way down to the the cross point, 50. But this isn't really encouraging. But it doesn't necessarily mean we're turning over. Yeah, I think a lot of things we have to look at is state two transitions. That'll kind of give us the first hint when the twos are starting to transition. The other thing we can look at is highs and lows. So lows are still flat. Highs are still kind of had nice pops here, and nothing big right here the last 2 days. So still nothing with the lows. So, during those pullbacks, we see the lows creep up, or we get a big pop right here, in those pullbacks. So this isn't really saying anything here. Still kind of greenish here, but just kind of careful about, when we get up in this kind of region, it just likes to turn around. Not always, but I'd say probability wise, probably turns down more than goes heads up. The 20 days are kind of moving back towards each other as far as the EMAs being above and below. Nothing from 50s, nothing from 200s. So, yeah, nothing really big on transitions. So, all right, let's look at the individual states real quick. Okay, so we got ones, this 52-week high, 50s back here. This big run up, we all pretty much stayed right around 45 or above. Typically, we'll kind of come up here in the, above 45 and then turn over. Same thing here, hit 50, turned over, 50, turned over. So we hit, 53 was the high here, and we'll just have to watch those twos. Not much going on so far, just a little uptick past couple of days, but we were real low here at 4%. Four's dead, nothing going on there, so that's 3%. And then we look at eights and sevens, and eights got down right around 19. So if we do turn over, a lot of those sevens will go back into eight, but last time here we were at 16, 15 here, 18, 17. These last kind of swoons. So down near 19. Now just keep our eyes on the transitions, overnight. So, and let's go into SPX. So here we are getting up into resistance range. Did hit new all-time highs. So kind of in there between the 1 and the 2. Excuse me. You can see, 1, 2, 3, 4 days kind of bumping up against that. We did get above this previous one here. And now we're up into this range. Top of the range is 5,800. My scribble here. Oh, 58. Sorry, wrong tool. Bottom 54, top 58. Sorry, it's hard to do this with a mouse. It's freehand. So, getting above that all-time high, closing above there, right above our, resistance. That's kind of right in between 1 and 2. So getting above there, we got 5,800. So we got lots of, resistance levels kind of packed right in here. Target 1, target 2, and then, the high end of our range, 5,800. So a lot of resistance to get through. We did pop through the first one, but you can see the all-time high here, which would be, another kind of short-term resistance. So lots of resistance going on there. Down to the downside support, we got the entry, and then we'll talk about the moving averages next. But kind of getting long in the tooth on this move. 43 average, 32 in. Not quite. Didn't make it all the way up to the average move, but we'll just have to see if we can get above these levels. As far as, downside, let's take a look at the chart. So we got the 55, call it. And then we got our 20-day, more importantly, 56.61. So staying above that 20, that's obviously the bullish. Last time we've had like crosses, it's only a matter of time. So really, we just want to stay above, that 20, 56.60. I think we're above there, about 40 points above there right now. So, about 60 points below that target 1. So kind of in between those ranges. And that's really what I'd be watching for. And, way below is the bottom of the range. You'd have to go through the 20 and the 50, bottom range 5,400. So up near the top end of the range, and just lots of resistance levels there. So just be careful. All right, so Russell. So this one looking more like an average move, kind of creeps up down here, support, and then we'll just have to see if it gets up in here into the average move. I think the key here is the Russell. You got to stay above entry price, which is kind of 2,200 range. Closing above there, consecutively would be important. Top of the range 21, bottoms. 23 is top of the range, bottoms 21. So this would be, I think, key for Russell staying above there. That entry price in 2,200, really. So it's been fighting it. You can see here, test here, kind of test here. Even today, another kind of test, and I think we're right above that. Last time I checked. So, back there, if we do hold that level, then you got, the 1-2 range, and then, target 3, obviously. The average move would pretty much equate to 2,300, top of the range. Kind of right in that area. So, got to hold that. We're right on it. So we're kind of right at the top here and then kind of right on support here. So let's look at the chart here. So 50-day, 2164. So that's below that 2100. Yeah, if we don't hold that entry and expect that 50 to be broken, kind of retest 2100 again. That's the bottom of our range. So quick lines for you. There's bottom range, top of the range, A3. And then, that's our entry price. Same modeling. Right now it's right at that 22. So that's kind of where I'd be looking. We should know next day or two whether that Russell holds, and we'll just have to wait and see on that. I think, overall market, obviously we had that the strike going on the eastern ports, which is could be a big problem, if that doesn't get resolved. Most of everything, that's all the imports, exports going out via ship for the most part. The bulk of everything. So, that's a lot of ports affected. The longer that goes on, the worse it is. Hopefully we don't have another toilet paper crisis. Just have to wait and see, how that resolves. Also, geopolitical. We saw, Iran kind of bombard Israel, and that's definitely not a good sign. I would expect Israel to retaliate. I think right now they're going to the Feast of Trumpets. So it's like a 3-day thing starting today. It was kind of interesting. Iran, sent all that stuff right before a festival. But we'll see how, I would expect it to escalate, honestly. Israel's not gonna, they're definitely gonna respond. I don't know what they're gonna do, but let's just hope it doesn't escalate too much, and just kind of dies off. But it's not looking good. I don't know if people saw videos and that. Let's see, 10-year kind of just hanging there, not doing much. Past definitely over the last week, just kind of chopping around. So the recent low is right around 3.6. So not much going on there. If you look trend line wise, it's kind of cut that off, at least recently. So we'll see. Was it there? Let's pull up Fed. So we're 36 days away. The election is, what day is the election? Is that the 5th?
Yes.
Okay, yeah, 5th. So right after the election. That's the one nearest to the sled election. And right now, this one kind of shifted a bit, from last week, last month to a quarter. So we're at 475, so kind of moving towards that quarter from where it was for 50, last week it was kind of flip-flops and wise. So then if we look out into the year, which is getting closer and closer by the day, pretty much not much movement, just kind of that more extreme got moved, towards lesser cuts. So this would be another 75. So this would be another 50. Right now it's looking like quarter for next, but we can see balance sheet, nothing crickets. Getting closer, like very slowly. I don't know why this is such like a big move in the chart. It's like, if we go back here, we're doing like, the chart just seems to be an illusion. That's like 2 weeks, that's like 100 billion, and this is 20 billion, and it's like, some big steep drop off, but getting closer to that 7 trillion. Yeah, I don't know. This definitely slowing down though. So, no good Twitter stuff I saw, so I'll just open it up to questions, comments on the market overall. Earnings also starting off. There's the JP Morgan, kind of the front end of that. So I think it's next week, the 11th, and our banks are starting to kick off. So a little over a week. Any comments, questions? No? Okay. All right. So we did have one earnings trade come out. Bullish pre-runner. So this is the first one. First confirmed. We've had quite a few unconfirmed, but SYF symbol, I think it's, I forget the name of it, Synchrony Financial. So it's down a little first day. You can see here it's up decent today. So this one have until the 15th, kind of week after that. I'm just looking for 25% profit. That's the first one. And we'll keep track of everything else. Everyone should have access to the quarterly earnings plan here. If you don't, just shoot me an email. You can pull up the Q3 plan, just see what's coming down the pipe. So you can see the third, you got another bullish pre-runner. This is the column confirmed. And then on the fourth, confirmed, another one, Capital One. So I'm still seeing a lot of these estimated though. So hopefully we get some more confirmed, as they pop in here. Yeah, it's getting better. I mean, when I first put this out, there's like 3 total that had confirmed. So as we get the data, we and you can always check it. I just like verify things in Yahoo. Just kind of real quick, if there's a range in the earnings date, then it's unconfirmed. But now you can see it's just a specific date here. But if you look at like, I think Exxon is, you get a range that's an estimated, so we don't know for certain. We just get a date range. So we got some more coming up. So in the next couple of days, couple confirmed. So all right, any questions, comments for me before I throw it over to Joe? All right, you ready, Joe?
All right, Josh. Good job, man. Thank you. Hi, everybody. Let's grab that screen. Just want to head through a few charts. Looking at some of these charts, it's like, we know the market has pretty much been on a tear. Wow. When's the correction coming? Nothing really, glaring on the home page. As Josh said, the XLV, rolled over into a state 2 yesterday, but, you can't keep state 1s and all these things forever. But I did want to take a look at, I think the most significant theme of the markets, you might argue back to the middle of July when, basically the Russell took off and the techs, they took some of the sales out of the tech. So you start to get the broadening of the market. So I thought I'd look at, the equal weighted S&P. just if we're to have a correction, what might we expect? So here's equal weighted S&P back to the COVID low. And, we rallied up for, into the fall of 21, beginning of 22. What I thought actually was interesting here, though, I mean, a lot of the market did top out in November of 21. And you can see, this thing, just kind of hung in there. And I think the S&P itself maybe topped out early January of 22, before the down leg. This thing continued. And, you got all the way out here into the end of March, where this thing was still banging, at all-time highs. Pretty dreadful, state one there, and eventually rolled into eights. But, this thing extended a whole lot longer than a lot of the other indexes, which I thought was kind of interesting. We then, go into the November 22 low. All right. So the lines here are basically the retracements from the highs end of 21, beginning of 22 to the COVID lows. And we got a 3/8 retracement almost on the money to that thing, somewhere in the 130 range. Okay. And that was after, the COVID lows. So I would have actually expected when I ran these numbers today, I was thinking we got at least a 50% or more retracement into those November 22 lows. I mean, that was the big low in the market. NASDAQ was down, 34% from the highs. So anyway, there we are. So if we fast forward and, we go to last fall's lows, we've had a hell of a run in this thing. We're in a solid state one, but I just thought it was interesting to take the current, and again, I was just looking at, and I'm going to go through all the ETF charts, just, essentially almost all of them had a hell of a run. So, what are we going to look for on a pullback? And this thing, I just thought it was interesting. Coming off of last fall's lows, a 3/8 retracement in this thing, which would be, not quite 20 points, takes us to, all those F2s, basically in the spring of this year, somewhere in the 160 range. We're just below 180 now. So, I just looking forward, if we get a pullback, I mean, I think that'd be worst case scenario, having this thing, pull back to a 3/8 retracement. But just a little perspective. And again, going back, it got my attention, the fact that, the equal weighted S&P hung in at those highs as long as it did, before we had that good market correction in 22. So we're talking equal weight. Josh obviously covers the Russell really well. Here's the same time frame in Russell. And, you get the COVID lows on the left side. We've talked about this before. It was 2,400 and change, in the fourth quarter of 21. That was a high in the Russell. And, Josh has laid out the levels real well. But just the perspective here, where S&P has, gotten to, some new all-time high levels. Certainly Russell has not. I heard something on a podcast in the last week that my son sent me, actually. We often refer to the, the Russell 2000 and how 40% of the companies don't make money. I heard somebody say that and this is just one source. He was on one of those Josh Brown podcasts, which you may know his name. I hadn't listened to him before. He's very popular, as many of you probably know, but he had a fellow in there by the name of Tom Lee. And they were talking about the Russell. This guy, Tom Lee, was wildly bullish on the Russell, thought there was enormous upside potential. We pulled up the earnings, I think a couple meetings ago. But the point that he made about the 40% that don't make money, he said the majority of those are biotechs, which, I was honestly shocked there'd be that many biotechs in the Russell 2000. But just, I thought it was interesting, so I'm passing it along. This thing, has some room, but again, it just wouldn't surprise me, I guess, at this point, if we get a little bit of a pullback in things. But it may be the Russell and the RSM that maybe do better than others if we are in fact going to have a pullback. So just going to go through the charts of the 11 ETFs, and I was going through them, was like, damn, we all know we've had a good run, and real estate, and as Josh pointed out, many of our state ones are getting a little bit long in the tooth. Oftentimes the average is around 40 days. We're in the low to mid 30s now. So, we're coming up on average time. This thing, I think everybody knows, kind of led the charge, surprisingly, jumping into a state one, back in June. So anyway, that's the real estate ETF. Had a heck of a run. Here's, materials. Also, maybe I'll space this out a little bit more. Okay, there's the 3-year chart. I'll go back to, this thing and hit up the 3-year as well. But, perspective there. But, we certainly have been to higher highs, in this thing. But here's another one. Utilities, we know they've been on a tear. I mean, is a correction coming? I look at these charts this is really the exception, the energy, but then look at the green bar over the last few days. And maybe that's the, Middle East tensions that Josh was referring to that are doing nothing but escalating. And you would sure think would be somewhat of a temporary, at least, headwind for the markets. But aside from XLE, I mean, these things have just done, gangbusters. So here's, the industrials. So I'll just go through them. Again, was just kind of blown away at the strength of the charts, which I guess I should realize. But almost with no exception, consumer discretion, we've talked about that a little bit. Healthcare, matter, Josh was pointing out, got blasted today. I think that's part of this thing. But this thing, had been a leader. We talk about the financials. It's and Josh pointed out, I think JP Morgan starts earnings end of next week. Maybe this, this thing's kind of sideways here. Maybe this is going to be a catalyst for the next move in the market as we start to get earnings hanging out at all-time highs. There's tech sector, which XLK we've been talking about for a while. No longer really leadership on the market after doing so for so long. So I look at those 11 and I say, darn, maybe we're going to get a pullback. So, and then Josh may get a kick out of this because I'm not a fan of gold, but I decided, because gold's been on such a tear, is there anything to look at here in gold, and does it really mean anything? So I went back and had my colleague pull the numbers. Here's GLD, and we've got, it is 63 days now in state one, where the average is, I think, 37, something like that. So I just asked him to go back and check in the database whether or not, how many occurrences we've had where GLD has been in state one longer than, its current run, which is 63 days. I know, and it's fun, running these queries, at least for me. I thought there would be a hell of a lot of days or periods where we had, greater than 63 days. And there aren't many at all. And, you look at the years, and basically you got right around the financial crisis, and there was a lot going on there with, government debt and funding. So you can almost, those bottom five, with the exception of 05, 06, you can almost throw a blanket over half of these. And then you had, a period in 16, 19, 20, and here we are in 24. So I don't have, a thesis as to what this may mean for the markets. Josh, I'm not saying you're a gold bug, but
No,
do you draw anything out of just, I mean, really a hell of an extended run in gold?
no, I mean, usually it's based off of the currency strength or, maybe there's just, countries buying it up. I don't know, usually one of the two. I mean,
Yeah.
typically people associate it with inflation, kind of keeping
Yes.
up with inflation over time. So I don't know how well that correlates, if you map it out over, like a century. But yeah, I think those are my thoughts.
Well, that whole inflation thing makes a lot of sense when you look at this trough in gold, and lo and behold, right around 2020, this thing started to take off, or at least rally. Take off's not the right word, but it was kind of interesting as, certainly inflation has been abating for a year or so that, gold certainly has not been. I did pull up, the dollar chart and, there was nothing really to look at. So, and some of the data didn't look just right. So I don't have that to share. But yeah, just thought it was interesting that we haven't had many periods like this in gold, where it's been in a state one as long as it has. So again, I don't have a lot to draw from it, but others of you have been in the market for quite some time, and maybe a few of you are actual gold bugs. Maybe you can pull something out of that. Just a couple other charts. IYT, pulse of the economy. Certainly, the headlines seem to say that the economy seems to be fine. Obviously, employment is key at this point. We got the employment number on Friday, bunch of numbers tomorrow as well, with I think some PMI numbers, ISM numbers, lots of numbers. But then, the big one will be Friday. And a couple sources I looked at, it looked like they were looking for about 140K non-farm payroll on Friday. So the market certainly will be looking for that. Couple more, we talked briefly about international markets last week. So just pull up a couple of them. Here are the developed markets, and then the emerging markets have sort of been ripping to the upside. So, just still a lot of cash on the sidelines and looking for a home. And then, our standards, gosh, I already run through these, just, the charts themselves as opposed to state modeling charts. I wouldn't be surprised if, we get another retracement like we had early September, working off of the August lows. But there's NDX, which again has not been a leader, although we're back in the state one there, and the good old Dow. And finally, I just thought I'd pull up Microsoft, and that certainly has rolled over just a little bit, but nothing jumping out in terms of a negative. It's just basically trading in a range for a while. So and then this thing is just talk about how quickly it went from 39 to 51 a couple weeks ago. Sentiment is a little bit bullish, but we are, I guess, 34 days out to the election, and it will be good to get that behind us. And I think maybe that's what we will need for the market to get up and go again. So happy to discuss anything if people have comments or questions. Otherwise, go yours, Josh.
See, Joe, this is Dave.
Hey, Dave.
Regarding the gold I don't know, phenomenon, or just the pricing on the chart, and that's the kind of like the movement in gold. I've noticed, well, I think I've noticed, put it that way. Sometimes what I think I've seen and what other people have other opinions too. But the Bitcoin and gold don't seem to be correlating all that well anymore. And I wondered if the Bitcoin it flew when they were announcing the Bitcoin ETFs, I think. At the
It was
price
last
spiked quite a
January,
bit
I
higher.
believe, last January.
Yeah, and then there was going to be what Ethereum ETFs come out, and then so I think that move got ahead of itself, and now it's not trading as a uh, store of value kind of stock like it was originally proclaimed to be. Seems like other governments and whatever aren't jumping all over Bitcoin to be like gold used to be for, a safe haven kind of asset. So I wonder if anybody else has got that same feeling, or whether I'm just imagining that they kind of have uncorrelated lately after the ETF news has subsided. Anybody want to throw in
I,
on that?
I agree with you 100%, Dave. I think it's been more recent than last January. But I agree 100% that there has been, a decoupling where gold has just continued to kind of go. There's a lot of pushback. I believe, I think I mentioned before, my oldest son is a pretty big, I don't know if fan's the right word, but he studies Bitcoin quite a bit. And I think it's common knowledge there's a fair amount of pushback from, government leadership on Bitcoin. And so it may have a larger reaction than maybe some other areas once we get through the election, if there happens to be a change. But time will tell.
And the last final comment I wanted to make was that, as I recall, the big I think it's about the second, maybe the third week in earnings season when a lot of the big techs report, which is pretty going to be pretty darn close to when the election happens. So I would not be surprised if there's some volatility. It would maybe come out during earnings right around when the election happens. That's my volatility prediction, or what I'll be watching for anyway. We'll see if that happens. But if we get big corrections, it's usually I've noticed it been during earnings seasons in the past when we have corrections kind of like out of the blue, where all of a sudden, like 2 weeks ago, who knew? And then all of a sudden we're down like 10% majors. So we'll see. That's the time period where I think we hear most of I think we have about 70% of the S&P 500 reporting by that time frame, by that
Hmm.
second, third week in November. Second week, I think it is. Anyway, that's what I'll be watching for. Kind of in wait and hold mode to see what's going to shake out between them. The semiconductors that I mentioned last time, or I was going to mention last time, I think I did mention last time. They kind of reported pretty nicely, and a lot of the empathetic shares of other semiconductors were also up in kind, and in a sense pulled back a little bit too. So I don't know whether NVIDIA is going to save the day for semis, but if NVIDIA falls, the semis will fall pretty hard too.
NVIDIA is way out there though in time. I'm thinking it's late November.
Yeah, NVIDIA reports very late, almost not quite as late as Micron, but pretty late.
Yes.
I think it's about a month after that big date that I was talking about.
Yes. Let me see it. Well, the 19th.
I'll see if I can find it too.
Yep.
Thanksgiving time frame.
Thanks for the insights, Dave.
Hey guys, Dan here. Can you hear me?
Yeah.
Yeah, just going back on the gold a little bit. Some of the things that I've been seeing is the BRIC nations are buying gold. They're actively buying gold, and supposedly well, that's not new news, but they're looking at coming out with a gold-backed currency. And I know Russia just bought a whole bunch of gold, and China's doing the same thing. India. So I think the one of the headwinds that we may be faced with is a currency crisis. I know there's a lot of, even some of our allies are looking to join the BRIC nations because of the way we were able to weaponize the fiat currency through sanctions and things like that. It didn't make other countries very happy to see us with that kind of power. So I think there's a united effort across the globe to become the alternative fiat, or at least competition. Maybe it'll take 10 years, who knows? But there's a lot of talk about currency crisis here on the dollar. I think that's why gold is probably one of the reasons it's going up.
Okay, good to hear, Dan. Appreciate that.
Yeah, that's a good point. I wanted to follow up on Dan. That's a good point, Dan. I think just recently, 2 or 3 days ago, where sanctions against China was not able to trade. Russia wasn't able to use Chinese yuan to trade in anymore, and that kind of put a crimp on them. As I recall, just 2 or 3 days ago, that came out. So I think you have a good point on other countries not being able to transact in, or they're using gold as a fallback for, what they couldn't do before, especially with energy commodities.
Yeah, I think as far as Bitcoin goes, I don't think that's going to go to the wayside. I think
Yeah.
it's going to come into its time. I think I don't know if I'll see it in my lifetime, but I think it's really going to be the wave of the future, because it's immutable, decentralized and everything. So someday I think that'll be the way it's going to be, And when that day comes, nobody's going to be able to hide dollars, like restaurants that are taking cash and hoarding it, and businesses, stuff like that. That money is going to be no good. It's like, when I was in Vietnam, they had military payment certificates. So when you go in a country, you have to turn over any greenback dollars, American dollars, for military payments. It looked like monopoly money, but that was to fight the black market. So anybody that was hoarding dollars or getting paid in dollars for whatever, they'd come running to you because they'd announce in a day MPC change, and they changed it. They might have red money one day, and then tomorrow is going to be purple money, and they'd come running to you with their dollars. Oh, you changed money for me, and that's the same effect with with Bitcoin. When that comes out, it's going to be like that MPC change. People are going to be trying to figure out how to, cash in those dollars without having the feds come after them. Oh, where'd you come up with all this money? So I think that day is coming. If they see all the dollars on the board, or all the potential dollars that can come in, or I think right now the reason it's not happening is probably because you got a lot of people, probably a lot of big people, power players that are hoarding tons of money, not paying taxes on it, So.
Interesting.
Nice.
Yeah. Thank you, Dan. Yeah, interesting.
All right. Well, I think that was it, right, Joe? Anyone else? Questions, comments? Thanks, Dan, Dave. Before we wrap it up here. All right, we'll do it again next week. Thank you all.
Thank you, guys.
Yep.
Thanks, fellas.